Before we turn the page on this last year, 2025, I want to talk specifically about what happened to the housing and the mortgage market and not what the headlines and the media were saying all year long. Because if you did follow the media or those headlines, you would think that this last year was a mitigated disaster for housing. The truth is, though, it wasn't. It was a normalization. It was a reset, and resets matter. Before we get into it, my name is Arjun Dhingra. I am your go-to resource for mortgage and creative lending right here in the San Francisco Bay Area. I've been in this space for 24 years. I work in San Francisco and live in Marin County, and it would be a huge privilege and honor for me to help you in any way, shape, or form if you're thinking about investing in the San Francisco market or buying a place of your own. So just reach out to me on Instagram at Arjun Mortgage and allow my team to assist you. I appreciate you subscribing to this channel and liking this video so that we can reach more people with content that's useful like this. And let's get into today's topic, which is a look back at 2025. Okay, so big picture, let's zoom out. 2025 was not a boom year for real estate, but it wasn't a crash year like many were calling for or were somehow interpreting it to be. It was the year that the market relearned balance. And to expand on that, let's look back at the COVID market, because a lot of people falsely assume that low rates and lots of activity and craziness in the market somehow signifies a good or healthy real estate climate, but it's actually not. There was nothing healthy or good about that COVID market. People lining up around blocks to look at a house and pay hundreds of thousands of dollars or even $1 million over here in the Bay Area sometimes buying the home without even seeing it. Homes closing in days or hours, not weeks or months, which is actually quite normal. So there was nothing good or positive or normal about that market. What we're in now, where things sit for a little longer and people actually have to negotiate, and you have to be smart about how you price it, and you have to be smart about how you offer on it, is all a normal market. We just got so spoiled with the speed of transaction and the fact that anything and everything would just sell for ridiculous amounts of money, that now that things move a little bit differently, that it's somehow bad. That's all BS. So here's what actually happened in 2025. Inflation, for starters, trended lower. Not perfectly, but it is moving in the right direction. It's taken a little bit longer because the US consumer is actually still spending quite a bit of money. Now, the US consumer is also in a record position of credit card debt, which is not a good thing, but inflation is driven by too many dollars chasing too few things. So inflation is cooling. It's not quite where we want it, but it's getting better. Real wages also moved higher. Now that could be what's fueling the consumer in the United States, because if they're making more money, and we all know Americans love to spend money, not save it, unless you follow this channel, this could be a connection to that stubborn inflation point. Now, the labor market softened, but it didn't break. We saw a lot of layoffs in the tech space, particularly right here in the San Francisco Bay Area. Now, most of these layoffs were more strategic. It wasn't because the companies weren't doing well. It's just that they were trimming back their workforce that had explosively expanded during the COVID market. And now that things are reorganizing or people have come back to office, they don't need a lot of those jobs. And they're also being proactive against any bumpy waters ahead in the economy. So again, these are strategic layoffs, not reactionary. Housing supply stayed very tight. We're still at a hugely disproportionate level of available buyers to homes that are actually out there for them. And until that flips, we're not gonna see any real reprieve in pricing. And lastly, what happened here in 2025, the big crash that everybody was expecting never actually happened. And again, it goes right back to that supply and demand quotient. For a crash to happen, or just prices to suddenly invert, you would have to have a huge amount of inventory just all of a sudden hit the market, and demand would need to get crushed, basically flipping the exact scenario or situation that we're in right now. Now, you never say never, because there's always a black swan event out there that could catch everyone by surprise, just like COVID did. But looking at the data and seeing where things are at across all markets, this crash just isn't likely to come to fruition. What we did see instead was a normalization after years of extremes. It's not exciting, it's not healthy, and it doesn't get lots of headlines in terms of it being a positive or a productive functioning market, but it's healthy. Now let's take a look at the headlines versus the reality. Every slow month this last year was labeled as a collapse. Every price adjustment got labeled as panic or market's about to turn for the worse. Meanwhile, what was actually really happening was buyers adjusting their expectations, sellers relearning their pricing and forgetting that it's now 2021 or 2022, but actually 2025, and deals getting more thoughtful. Remember, I said that word negotiation. This was something that was not allowed to even be uttered. You couldn't even whisper it back during the COVID market, but now you actually could negotiate. In fact, the best deals that we saw come across our desk this last year were all this last year. It was because buyers and sellers actually sat down at the table together and came up with a good deal or a win for both sides. I think the buyers got a little bit more of an upper hand, but sellers by no means we're being shortchanged. Now, everything I just described is not a failing market, guys. It's actually the opposite. That is price discovery doing its job. Markets don't move in straight lines. They simply recalibrate. Now, let's talk about the mortgage rate reality. A lot of people spent this last year waiting for mortgage rates to fall off a cliff. They just figured that at some point, these rates have to come not just down, but falling down from those elevated levels. 25-year highs, in fact. Well, it didn't happen. And quite honestly, that stability mattered more than the dramatic cuts. This was the year where structure mattered more than rate, liquidity mattered more than leverage, and creativity mattered more than convenience. The deals that closed weren't the easiest ones, but they were the best thought out ones. Lots of strategy and conversation and thought went into all of these deals. So given all of this, who were the winners in 2025? Well, buyers who stayed flexible for one, sellers who priced realistically, agents who stayed visible when visibility wasn't the most sexy thing to do, and clients who planned and prepared instead of panicked. Buyers that stayed locked in and engaged in this market this last year ended up scoring the best deals that, again, I've seen in 24 years in terms of what they paid, the concessions that they received, and the fact that they didn't have to overpay. Their opportunity to refinance or restructure their debt will come about plenty of times during the time that they will be in that home. But to negotiate that home price, which affects your property taxes and the overall debt that you're going to finance and pay interest on, you get one shot. And for most all buyers out there, they nailed that one shot. It was not the year for shortcuts. It was a year for professionals, for real strategy. So here's my outlook going forward as we land the plane. I'm very optimistic about what 2026 holds, not because it's looking to be easy, but because of what the fundamentals are telling me. This next year will reward prepared buyers, educated clients, realistic sellers, creative financing, and clear communication. Now, if you know me, you know that I'm not a big New Year's resolution person at all. In fact, I think they are all BS. I believe in daily habits, weekly execution, and constant preparation. Stack enough small wins on top of each other, the momentum builds and the wins take care of themselves. So if you stayed in the game this year, even when it felt slow, then you're already ahead. The next chapter, 2026, belongs to those who are preparing quietly rather than complaining loudly, shouting at the rain, blaming the inventory, blaming the interest rates, blaming Donald Trump for why they don't have a house. So just focus on the opportunity, work with credible people, and again, if me and my team can be of service to you in any way, as we have experience in helping thousands of families over these last 20 plus years, please reach out to me on Instagram at Arjun Mortgage, and let's put together a game plan to help you win in 2026. Thanks for watching, guys, and I will see you more this year.